Hi, and welcome to Slot Leader, a Cardano finance podcast. I'm your host, Umed Latifov, and in this episode, we have a special guest from Silicon Valley. He is a co-founder of a startup that is trying to use the blockchain technology in order to reduce economic frictions in the management and transfer of real estate. This was a very interesting interview with a lot of good insights, and I hope you enjoy it. But before we get to that interview, I would like to take this opportunity to thank everybody who has been watching and listening to this podcast. Your support has been tremendous, and every single interaction that I've had with you has improved the quality of this podcast one way or another. So thank you for that. If you are new to this podcast and you like the type of content we're putting together, please don't forget to subscribe and push that alert button so that you know when the next episode is up. Let's have a quick look at what's been happening in the blockchain industry. Square, which is a publicly traded company with a market cap of $80 billion, has just announced that they have invested 1% of their assets in Bitcoin. They justify this move by saying that Bitcoin represents an asset class that aligns really well with their mission statement. But I think this move has several other important implications. Now, Square is the second corporate entity that has publicly supported Bitcoin with their investments. The first one being the MicroStrategy with their investment of $425 million. But the growing number of corporate entities that are supporting this asset class bodes really well. It, in effect, represents the vote of confidence of corporate America. There might be other reasons for corporate entities to invest in the asset class, and that could be due to diversification of their portfolios or the upside that they might see in this asset class. But either way, I think this is a really good development as it brings the spotlight into the industry and shows it as a viable investment opportunity for sophisticated investors. On to the Cardano news. This past week, IOHK released a blog post where they detail their progress on Marlowe. Now, for those of you who don't know, Marlowe is a domain-specific language created by the researchers at IOHK to specifically write financial contracts. It's targeted for financial professionals and not necessarily for developers. And they have created a sandbox where you can test your skills and see what kind of contracts can be built. I'll include the link to that sandbox in the comment sections to this video. Digital asset prices demonstrated some interesting price dynamics since the last time we covered them. The price of ADA went from 9.3 all the way to 9.95 cents, and then it was followed by a retracement all the way down to 8.94 cents. The last downward pressure that I could identify probably came from the news that we did not have any agreement on the stimulus package. Maybe the algorithms interpreted that as a negative news and started trading it down, the whole space. Now, as of this morning, we saw a large green candle in the Bitcoin price that kind of lifted everything up, and that is probably caused by the fact that Square has invested 1% of its capital in Bitcoin. And we have some indication that the stimulus package might be coming eventually anyway. So maybe those two pieces of news are driving the price at this point back to 9.6 cents per ADA. Our special guest today is somebody who I've known for more than 10 years. He has an interesting background and has worked in industries such as oil and gas and power, and at some point he was the government official in the Republic of Tajikistan. He was the deputy vice chairman of the central bank in Tajikistan and the deputy finance minister in the same country. He is at this point an entrepreneur who lives and works in Silicon Valley, and his startup, RealtyBits, has been financed by Y Combinator. I would like to welcome Umed Latifov, who is the co-founder of RealtyBits, to this program. So welcome to the show, Umed. It's great to have you here.
Thank you. Thank you, Umed. We have the same name, so let's make sure your viewers are not confused.
Yeah, I'm sure they're not seeing double at this point. That's why I have the gallery view. Yeah, so Uma, if you could tell us a little bit about your background and how you came to the blockchain industry, and that would be helpful for our listeners.
Sure. I mean, to keep it short, I spent many years in the Silicon Valley in the entrepreneurship world, and I took a little bit of a break, went back to Tajikistan, did a project in the banking sector, and was asked to join the central bank as one of the vice chairmen. And then I did that for a little bit, and I became a vice minister of finance. And that's when I got the exposure to the entire payment systems, property ownership, tax collections, revenue side from a macro level. And that's around the time when Bitcoin was just picking up. So that kind of it coincided with what I was doing and the efficiencies of the blockchain. I tried to implement the efficiencies of the blockchain with the payment system in the country, which was, as you can imagine, a challenging task to do in 2015 and 16. But it never left me. So I caught the bug, and I came back to Silicon Valley in 2017, and I started RealtyBits with the goal of applying the efficiencies and the immutability and the trustworthiness of the blockchain technology with property ownership, which is in real estate.
Absolutely great. So if you could just tell us a little bit about RealtyBits and what's the value proposition there? Why would people, what does it do?
Sure. So our main value proposition, our main goal is to make real estate ownership simple and to make it global. And we do that by creating a layer that interacts with the traditional, so-called off-chain systems and the on-chain blockchain protocols. So we create a hybrid platform that allows users to buy into private real estate offerings, for now US-based private real estate offerings from anywhere in the world. And our platform does transaction confirmations, payment processing, and it also does it in a compliance way by verifying both the asset and the investors into that asset.
Yes, and I've seen quite a few sort of attempts to bring the real estate, which is one of the interesting and probably straightforward use cases of blockchain industry, bringing real estate into this industry. So we're talking about deeds being expressed as a digital assets and stored securely in a blockchain, things like that. But I see a lot of these projects that have had some sort of difficulty implementing that idea. So how has that been with your with RealtyBits? So what has your experience been there?
Yeah, as you said, it is a very sort of logical use case, but it's actually pretty challenging to implement as a product. And that's because real estate itself is one of the oldest types of assets in the world. We've had one way or another real estate ownership since basically we started walking on this earth, starting from caves, then to castles, and then to condos, and now to different kinds of buildings and commercial real estate. It is complex because of all the regulation around it. The actual property and the ownership in the property, putting that on the blockchain and tokenizing it, so to speak, is very straightforward. But doing it in a verifiable and compliant way is the challenging piece. That's why it took us almost 3 years to put the product together to make sure that it captures basic requirements of the legality that it has to be behind the real estate ownership. So there's a lot of parts that are involved in it, all the way from verifiable ownership of a piece of real estate to payment processing, to transfer of ownerships from one owner to another, to paying back any sorts of dividends that comes from your real estate ownership, and to selling that piece of real estate and getting back the payment. And so our system manages that entire comprehensive sort of steps involved in a real estate property ownership ecosystem, so to speak. So it's pretty challenging, but we like to say that we actually built the first ever product that does use the blockchain technology to make real estate ownership simpler.
Oh, that's fascinating, and the fact that you managed to pull it off in a jurisdiction that is so it's got a lot of regulation in it is quite an achievement. Is it a working product at this point? Can I just basically take the deed to my house right now and put it on a blockchain and start basically
Sure.
accounting for everything there?
So we are not doing right out ownership of residential real estate because, as you said, the deed ownership and putting that on a blockchain is very, very complicated. Basically, because of the existing structures, you got the county registers that have been recognized by the courts and the legal and banking system as the true verifiers of the ownership, your ownership in the underlying residential real estate or property or commercial real estate. We don't touch that part because to do that on the blockchain, basically the entire legal system, the banks and the courts and the ecosystem has to recognize the blockchain as the alternative to the county register, and that's also doable. But I don't think we had that much time to attack that problem. We did take a look at it. Instead, we concentrate on commercial real estate ownership. It could be residential, single-family residences, but in a private offering entity format through an LLC structure where you and a group of others can get together and buy a property as a group of owners. Our platform is set up to manage that process, not your direct house ownership where you're going to go live in and pay mortgages.
Oh,
the commercial real estate sector is a $17 trillion market in the U.S. It's quite large.
Yes. No, the fact that you achieved it, as I said, is quite quite impressive. But I want to move on to basically application of this technology, and especially what you're doing with Realty Bits in emerging markets. In countries like Tajikistan, where you worked, where you've seen everything from the regulator's perspective, from somebody who worked in the the central bank, in the finance ministry. Do you see the the rollout of systems like that with being done with less impediment, because there isn't a lot of existing structures that could provide resistance to this kind of technology?
Yeah, I mean, you're absolutely correct. I think the developing world could actually leapfrog the developed world if they adopted the blockchain, because they have more need to it. They have more. There's a more use case for them than in the developed world. In the developed world, everything already works. I mean, not perfectly, but the pain point is much bigger in the developing world. I think we just certainly, if there is the right effort put behind it, it could do wonders for the developing world. They could put any types of property ownership on the blockchain. The thing that from, as you mentioned, in my experience, one of the things that's very important for the developing world economies is the flow of investment, the FDI, the foreign direct investment coming into the country. And the flow of investment always is a lot more sustainable when the ownership of the asset that the investment is going towards can be verified. So in the developing world, if they put together this legislation that can certainly recognize the ownership of the assets using the blockchain technology, then it makes the capital inflow a lot more straightforward and a lot more applicable. Which there's no such big need in the developed world because the capital already flows freely in the developed world.
Yes.
From a sort of totality perspective, if you go asset by asset, commercial real estate ownership or real estate investment ownership in the United States is still pretty segregated. It's not widely available. It's confusing and it's costly. So the reason we're doing it in the United States is because there's still a huge pain point here. We're trying to make it simpler, especially now with COVID. It's everything is digital, so that's kind of fits with what our thesis is, where we can make the property ownership basically touchless, so to speak. It's that's not how we planned it to be, but this is how the time that we live in right now kind of planned it to be for us.
No, it's an absolutely sort of great selling point for anybody who wants to, make this industry, work and make it integrated into the existing industries. And, the fact that we can buy and sell, the possibility of buying and selling real estate with the touch of a button on your phone is a pretty enticing one. And as you pointed out, the blockchain industry still has a lot of applications and use cases that could be justified, if not by the mechanism itself, as you said, there are registries here, et cetera, but by the sheer cost reduction of those registries. Yes, it probably will wipe out some industries, so the counties wouldn't have to hire people to do the work, for instance, right? If I buy a real estate, a lawyer has to go to the county's registry and look up this house, the deed, and see if it's encumbered or unencumbered by any liens, right? And that would become a very simple task on a blockchain, for instance. And you can replicate that capabilities to an array of
different kinds of assets.
Exactly. Yep. And sectors as a whole. And things will become more clear that we don't need these industries. And the fact that I think the blockchain is in its nascent form is completely obliterates their business structures is kind of menacing. So it's a little bit uncomfortable for people to realize, which is why probably there is a pushback in the developed world as we try to find out alternative ways of using this technology. But nevertheless, the need is there, the cost benefit is there. It's orders of magnitude larger in developing countries. I agree with that. But I wanted to touch upon this issue of you being able to integrate the current sort of payment rails, banking rails, because I think that's one of the selling points in your business model of being able to seamlessly go from blockchain to the current banking system. How was that experience? Did you have to do a lot of work? What's the story there?
Yeah, certainly to integrate with the banking solutions provider or backend banking APIs, the banks, of course, they want more liquidity coming into their system, but the compliance is the biggest challenge. So in our experience, we had to do a great deal of convincing and show how we verify users on our platform, at least with the same standards that a bank would verify when they open an account for you or me. And we go to great lengths to verify a person. We have a lot of tools in place to report a suspicious activity or to stop a transaction that looks suspicious, and a lot of other layers that I don't want to go into here that made our banking partners comfortable. The one thing that still here, even in the US, in the developed world, the people easily confuse blockchain technology with ICOs. And we don't do an ICO, which we had to explain to the banks that why we just use the immutable ledger, the blockchain part, the protocol to verify transactions and to settle transactions. That's to the extent of our application for the blockchain. We don't issue tokens that can be freely traded on exchanges. These are restricted securities, the same security that you and I would have if we went and participated in a building purchase with a group of other people. We just put that on the chain to make it more manageable and more efficient and more visible. And we were able to convince our banking partners that this can be done in a compliant way and also, we give them full visibility about how the asset works and who the owners are. The same thing that they would do right now, but in a lot less efficient manner. So that's how we were able to convince them.
Oh, that's fascinating. So I want to segue, this conversation, I use this as a segue to the next portion of our show and talk about blockchain, your experience working with blockchain. And As I understand, you are using what's the lumens, right?
Stellar.
Stellar, yes.
Yeah.
Using
Stellar
Stellar,
protocol.
yes.
Yeah.
And I would like to basically know what prompted you to use them instead of Ethereum or any other dozens of blockchains that are out there to house or to store your tokens and build your business.
Yeah. So Stellar Protocol, I mean, there's many reasons why we decided to partner with Stellar. The first reason is the team at Stellar is just fantastic people, very down to earth, despite their success and their reputation. They're fantastic people to work with. And their protocol is also very rigid and fitting to our use case, which is restricted securities. This is really hard to replicate on Ethereum, and it's also very costly to do on Ethereum. With Stellar, their protocol allows us to customize the securities, the assets that we put on our platform. We can customize it exactly to the use case. And we put a lot of work on top of what the Stellar protocol allows us to do on our end in order to make that happen. But the fundamentals are there. It's the best protocol that we had at the time, about 3 years ago, to do what we do now. Which we looked at Ethereum also, but Ethereum, at least at that time, I haven't seen what other developments have been on it. At that time, Ethereum was very good for issuing just digital currencies because it was very good in terms of transferring a digital coin from one wallet to another. But with real estate asset ownership, it's a lot more complicated than that. It's restricted securities, so you can't, just because you bought a piece of a building doesn't mean that you can turn around and sell it at an exchange, or you can turn around and send it to somebody. And Stellar allows us to put a lot of those tools in place to restrict the security or to verify a user and to make sure that you are compliant. So it's a compliance and restricted security features that we developed on top of the Stellar blockchain that allows us to do what we do now. That's why we chose to partner with Stellar, and they chose to partner with us. So obviously, they looked at our use case and they've been very grateful and they've been very helpful, and we've been very grateful to them.
That's fascinating. Now, to go back a little bit to our previous sort of discussions, that kind of this question popped in my mind. Are you planning to roll out your technology in emerging markets? You know, do you have any talks right now currently going on with any countries?
Yeah, so we've been approached by some people from Eastern Europe, Asia. This morning, somebody from Canada reached out, but they're not. Canada obviously is not an emerging market.
Yeah.
Latin American countries. We do have a version of the platform that we can provide as an ancillary services, just as an enterprise solution. We wouldn't do the offering and manage the offerings ourselves, but we could give the technology where they can do it according to their local regulations. Mm-hmm. And we are able to do a customization like that, where, for example, if somebody in Africa wants to do a real estate offering, they can use our solutions to run their own product, their own website. We just manage the nuts and bolts of it to make sure that they can do tweak it to their local regulations to be compliant. But we ourselves, for the offerings that we run internally, they're all US based at the moment.
I see a great use case actually for a platform like that to codify all the regulations around the world, because then everybody will probably come to you. It's one of the things that Charles Hoskinson mentioned, I think 2 years back, is that in the blockchain space, transactions would automatically get approved or disapproved based on the jurisdictions they touch, and those jurisdictions would have different kinds of rules. For instance, your token A that isn't allowed in jurisdiction B would never be able to conduct business there. And in order to do that, you have to go through different go through different kind of channels to make sure that your token gets approved. Yeah. So something like that could be probably a good business case for you guys, because you have already done it in the one of the probably most challenging from a regulatory perspective places.
Yeah, I think you're absolutely correct. It's probably not something we would do, but I do see a great need for a compliance protocol. You could totally, as you said, you could create a protocol that runs, uses the blockchain technology that allows you to issue tokens that fit a certain jurisdiction compliance requirements. And this is mainly, I mean, all of the compliance requirements for pretty much all over the world are already available. But I think somebody, it would be a good use case if we were able to, if there's a blockchain protocol that allows you to issue assets in a certain country. You just select the country and it tells you what you need to have in place in order to make this asset a legally compliant asset. I don't know if somebody's doing it, but that would be a tremendous use case for that.
Yeah, I mean, all these regulations could be turned into a code that could be applied to our digital assets in a very simple sort of way.
Yeah.
It will also take away a lot of business from the legal lawyers and legal companies. That's for sure, because that's what they get paid to do, right? To write legal opinions.
Yeah, I don't think it would actually displace them, because they're still gonna, it will make their jobs easier. You'll make them more efficient, because there's so much that needs to be done. Just because I think from what we've seen, just because we made a few things that were inefficient more efficient, it doesn't mean there's not other things that needs to be done. What we've seen actually is, when you put some processes in place that makes 10 steps that used to be required, turn it into 2 steps, then it it opens up new use cases where you didn't even think about before. So there's always work to do. It's just, you're going to be just a lot more efficient. It's you're right, a lot of people are scared or get sort of, oh, this is going to displace me. This has been for ages, for hundreds of years. People are always not accepting of technology efficiencies, but there's always new things you can do. You just have more time to do new things.
That's true.
I personally don't see it that way, but
no, that's true. I mean, the thing is that blockchain, I think, since internet itself, blockchain is the first use case of technology, or the first iteration of technology that has such a fundamental value and it changes our lives fundamentally. If you think about it, it's just basically an immutable ledger, in its basic form, secured by cryptography. But it has such great implications about everything that we do, pretty much, that sky's the limit in terms of its use cases. We are kind of trying to get, to fit that technology, or to fit our analog lives into this technology, which works on completely different and more efficient ways. And you've done it, kudos to you. But I think ultimately what will happen is that the laws will have to change, and that will take time, of course. But, it's good that this kind of thing can be done already. And as you described it, it looks like the commercial real estate is not as restrictive in terms of the laws and regulation. It's just why you're there.
Private commercial real estate.
Oh, private. Okay.
It's still restrictive in like, we can't just take any investor, for example.
Yeah.
They have to be accredited investors, because those are the US regulatory requirements.
Yeah.
There has to be certain exemptions by the SEC that has to be in place. So these things are already in the legal code. So we take those things, we don't try to change those, because obviously that's going to take a lot longer than 3 years to change. But we take those, we looked at the entire process that is involved with commercial real estate investment process and ownership process, and we kind of reimagined or restructured the process into different segments, and captured, put that as, created a layer that captures that entire thing and makes the ownership part more efficient, because those things already existed. Well, the biggest problem with commercial real estate or real estate ownership was the transfer of ownership. That's what it was. It still is very inefficient. If you and I buy a building together, then if I want to get out and sell it to somebody else, that's not a push of a button. That's me finding that person, and that person talking to you, and that person making sure that the deal terms are correct, and that person then finding a lawyer to make sure the paperwork is signed, and then going to the bank and doing the transfer. It can take many months or even more than a year, depending on the complexity of the situation to do. What we do is we record the entire terms up front, and then we issue the units of ownership that represent those agreements. These are not smart contracts. These are the contracts that you and I sign legally. But the unit that we create is backed by everything that we agreed as a group towards the ownership of that asset. And and we make sure that the digital contracts are very securely saved and shared with everybody, just like it's done today. And the units that are backed by all the contracts can then be transferred according to the terms of the contract. And now, they're always available to be interpreted, read, or shared between relevant parties.
Do they live on a blockchain, or their hashes live on a blockchain? How do you verify those things? I'm talking about the contracts themselves, not the digital assets.
So the hashes, the references to the contract live on the blockchain. The contracts themselves cannot be, because they live on AWS bins and in your personal folder, because you're the owner.
Okay.
And that ownership contract that backs your ownership, you have a copy, the issuer has a copy, and then we have a copy, and there's many other copies that we store that kind of replicates the mini blockchain. But it's very difficult for it. Yeah, it's very difficult for it to get lost. Okay. It's always recover it unless the world ends.
Yes. No, that's great. And by the way, my previous comments about the laws changing doesn't mean that you have to give up your standards for, say, the SEC standards for protecting the consumers and the investors, for instance. But the nature of these standards changing so that it's easier to, let's say, for them to understand that the blockchain is immutable, for instance, is a key kind of concept.
Correct. I agree.
Imagine if they recognize blockchain as a legal means of storing information or contracts, etc. It's a legal ledger. Then things would have been easier. So the question is, which one of these blockchains do you trust?
Yes. That's a good question.
So one of the things that I noticed, Vitalik Buterin of Ethereum went to the World Bank, and I asked some of my former colleagues to invite me there. And one of the questions that he got asked, I think it was last year or the year before that, one of the questions he got asked was that, we issue these assets, right? Let's say that the World Bank issues some assets on Ethereum blockchain. And then I think the guy was from Treasury, and he said, what are the guarantees that these assets will be there 20 years from now, which is the length of our loan or something like that, right? Let's say that I issued that. I don't think Vitalik could bring himself to actually answer that positively. And that's basically the biggest sort of threat to not the threat, but the impediment for companies and banks to actually adopt it as something that will last. That's not the case with blockchains like Cardano, I think, because we don't foresee radical changes that would in Cardano ecosystem that would wipe out part of records and then say, okay, well, whoever had deeds going back to like 2019, for instance, in 2050, they're going to be wiped out. And if you had something stored in the chain, good luck. Things like that probably wouldn't happen.
Yeah.
But anyway,
I don't. Yeah, I think to to that question, what are the guarantees going to be in 20 years from now? I don't know the context of the exact conversation, but it's the same guarantees that they issue that asset now and plus, right? Because it doesn't have to replace that process. It could be an addition to that process, because that process can go on right now. It's if the World Bank, for example, issues a new equity class, for example, right?
Oh, okay.
Yeah, a new bond.
Yeah.
Right now, it's such a complicated process involving thousands of pages of paperwork, and that bond, in order for it to be traded on a platform, a specific platform, or for somebody to buy it, that's a very complicated process to get to that platform for somebody to buy into it or for it to be traded. The process can be simplified. The existing creation of the legal documents for the bond doesn't. It would be great if there was a more of a immutable way of creating that, but we don't have to jump into that right away. We can take that existing process and make part of it, part of the transfer and part of change or tradability a lot more efficient than it is today. So partially it could be a lot more efficient than it is right now.
I think they started a pilot project in the World Bank where they would account for interest payments, for instance, as a smart contract on Ethereum, on the version of Ethereum that was private, with the, I think, 7 or 8 entities running it. But the payments themselves would use the the traditional infrastructure.
Yeah.
So,
but if once it's in the blockchain, it will be there 1,000 years from now, as long as you just unlock that last block. It can always be referred to whatever the previous transaction before that block was, right? You can always recover it at least.
Yes, but the thing is that what if Ethereum in its current form wouldn't exist? Then you would basically just own. Let's say that Ethereum just completely transformed into something else, and they started from New Genesis, right? In Ethereum 2.0. I'm not saying that's going to happen, but let's say that something happened and that was the case. Then the old chain would die or be maintained by people who issued assets in it, because they are going to be the only ones who would be interested in maintaining it and moving it forward.
Yeah.
But that risk,
the records would not die though, right? The records will always be there.
The records would.
The new records are not going to exist.
Yeah, and you wouldn't be able to use the same platform. You'd have to kind of wait for these old assets to kind of work their way out, and then you'd be issuing new assets. And in Cardano, this is. I think it's going to be a much seamless process. I think they have a process that it's called a hard fork combinator, where the chain changes its parameters on the go, and it's seamless, and it's done through the vote. So it's something like that, probably would be much more seamless in terms of, if things change, the chain would change with them. There wouldn't be any necessary.
That's interesting.
Need for a hard fork will be completely gone. And that's what happened when the Cardano community and Cardano blockchain went from a Byron, which is one iteration of the technology, into a Shelley. It just happened seamlessly. We watched it online, and it was probably the most boring event ever, because nothing happened, which is what you want your financial infrastructure to do. You don't want volatility in your records.
I think the Ethereum, by being second, I guess, after Bitcoin, they have both the blessing and the curse, right? The blessing is because they're, so to speak, silver standard of the digital currency world, but it's really difficult for them to change.
Now it is.
So if that kind of flexibility, they kind of became a legacy system, so to speak, if you want to use a current, tech analogy. But I think if for example, that's not a problem with Bitcoin, because Bitcoin is supposed to be finite, and it's supposed to be the way it was created. With Ethereum, there's no caps. So unless it changes with the current demands, and that change is actually, it's a very seamless transition, it will have issues. Then they have to do hard forks, which creates these new types of currencies every time they do a hard fork. But if as the way you're describing Cardano, there's a way to transition or to update your protocol without having to hard fork. That's fantastic, and that's one of the things that we see with Stellar also. They've taken great care in terms of making sure you don't have to change the entire chain in order to update your protocol. which is
Yes,
something that is
there's
very
one
useful.
thing, yeah, there's one thing that a lot of people in the blockchain industry probably may not realize or value is that financial industry values stability and predictability. If you see that, if there's some news that kind of adds to the uncertainty of certain events, the stock market reacts really fast, and that's basically it shows that stability is a premium that you might want to pay, or something that you strive to have when it comes to financial contracts or financial instruments or financial systems in general. If a platform can guarantee that securely, the way that, let's say, Cardano does, because their code has been formally verified and written in Haskell, which kind of checks for all these kind of bugs that might creep up on you if you use the imperative programming. Then you might have a shot with transferring the financial operating systems of the world into a blockchain. So I want to move on to the issue of I'm sure you've done your due diligence when you picked Stellar for your blockchain. But right now we are in a different setting. It's a brand new world in a sense. If 3 years is just like 3 decades, 3 years in blockchain is like 3 decades in terms of development. If you were to think about either making your platform multi-blockchain, increasing sort of the reach of your token, let's say, or entirely moving the business logic into a different platform, what would be the criteria that you would consider to bring your business, so to say, into a new platform?
I think for us, obviously, the basic fundamental features of the blockchain has to be there, but I guess that's gonna be expected for any type of protocol. I think in simple language, these upgradable features without having to fork is going to be very important. And for us, in our specific use case, these are restricted securities. So the tools to restrict the transfers and to customize each asset that we would issue according to the requirements, the regulatory requirements or the issuer requirements is going to be key. I think that's possible without having to change the core features of the blockchain. They have to be these additional layers that protocols have to consider in order for not just us, like the entire financial world, to start using the different blockchain protocols. And these are still, we're talking about hundreds of trillions of dollars in property around the world, and the protocols being less than 10 years old. So it will get there. I just don't know when, but there's just a lot of efficiencies to be realized. So it's going to get there.
Yeah. And do you think there's a use case in your line of business for having digital identities? And doing KYC, AML on the fly?
Of course. Yeah. Right now, I mean, the KYC AML that we are required to do, we use traditional systems, and these are not traditional, don't give me the hard copy of your passport. We still use technology, which is, advanced technology if you're not in the blockchain world. But the blockchain, if there was a digital identity token that could use the blockchain technology that we could rely on, obviously we would totally use that, because it's going to be an easier implementation.
So from what I'm gathering here, listening to you, Umed, is that, and I'm referring to him, not to myself, that you need to have, features to restrict the transfer and sale, let's say, of digital tokens, and on top of that, being able to identify your users, in this, new type of protocols through digital IDs could be beneficial, or being able to do KYC and AML on them, because that's probably the best use case for a digital identity there.
Yeah, that's because the regulation requires it. I mean, One way or another, for me, it's what can we do? The protocols have to be flexible to fit the existing regulation, because in my view, that's actually faster to do than to change the regulation to fit the protocol. That's gonna be, that should, I would never start there, because regulation has a hierarchy, it had a need, and it's been sort of morphed into what it is today, or decades, and discussions and public opinions. I don't think we can reasonably expect. Yeah, I don't think we can reasonably expect the regulation to all of a sudden be based on the blockchain. But we can. It's easier for us to adopt the blockchain to reflect the regulation, and it can work, because it just makes whatever the code, the legal code, a lot more efficient. So we just get to the same endpoint. Either starting here is just a shorter. It's a shorter road, basically.
Yeah,
but these changes mean like so much efficiencies that if you make, for example, real estate ownership 0.01% more efficient, that literally means $101.6 billion basically. That's
year,
a lot of dollars.
That's per year, right? Or the market.
Yeah, correct.
Yeah. No, that's great. I mean, I'm glad that
in the US only.
Yeah, in the US. No, I'm glad that there's products and solutions that are being built at this point. And I'm super excited what you will deliver to the world, because it looks like this technology could be used anywhere, and it's needed everywhere pretty much. It's good that you are open to experiment with technology, and maybe if there is a use case that could be enhanced, but if there's a protocol that could enhance your use case, or maybe get you to markets there that were otherwise sort of closed, that you're willing to consider moving or whatnot. As a side note, since this is a Cardano finance podcast, I just need to tell you that there is, the Cardano is working on a what they call the ERC20 token. What is not? It's a tool that easily transfers
Swap.
Yeah, it basically transfers all your smart contract into Plutus, I think. And the process of deploying your smart contract on Cardano becomes much more easier, or redeploying it on Cardano. So since you're not in ERC token, it may be a little bit of a different story, but we are expecting to basically have a lot of projects on this platforms, especially given the prices of Ether and
I think for us, we can, if Cardano has the features that we need, we can issue assets on Cardano, or swap the Stellar issued assets to Cardano, or make them work with both protocols.
Interoperable.
As long as you don't have a double accounting, so to speak, or have two assets living in the same blockchain. Then it should be easy. Like we can easily pull, if somebody wants to use, for example, Cardano to issue their assets, we can, or if somebody wants to send their Stellar based assets to a Cardano based wallet, then that's an easy solution, right? You could burn the Stellar assets and issue the Cardano assets instead, that reflects the same asset. As long as you don't do it twice, then it should be doable.
Yes, that
and
place.
It could come back from.
Yeah, that places a lot of trust on you guys to do things right. The best solution would be to actually have what they call something that has been proposed by Cardano, actually, to make the proof of work and proof of stake interoperable, which is without even burning it, but it just basically what it does, that the chains will be able to talk to each other. Let's say that I am sending Ether to Cardano. You send it to a smart contract. That smart contract, I think, will lock it, and then automatically that will And that smart contract puts a proof in the blockchain that, this much ether has been locked and is available or should be available on Cardano. And then there would be oracles that would read that and then transfer that information into the Cardano, record that into Cardano. So in this case, I guess the intermediary would be the oracle, and not your company, for instance, which could be considered a single point of failure or whatnot, or the risk. But then it would be more seamless in that regard. So you don't have to sort of be the sole company responsible for issuing or burning tokens, etc.
No, so you could, you should never take our words for it, right? You can, if we did that, for example, where you could issue or transfer assets from one protocol to another, you can actually see the process of transfer on the blockchain. Right. Then you can just see that in fact it actually went. It's like a debit credit balance, right? You see the asset reducing on one side and increasing on the other side. So it's but it's a possible solution. We haven't looked at it that way yet, but it's something that we would probably need to rely on a neutral protocol to verify such a transfer, because we wouldn't want to do it ourselves. Because it takes the question of it creates a perverse incentive, for example, and as you mentioned, a single point of failure that we will not be comfortable in pursuing.
Yes. So the way I see it is that if you ran a script that does that for you, and what if something happens to that script? What if that script stops working? So then you will have a problem. But if this kind of stuff is happening on a blockchain in a wide scale solution, is a wide scale solution, as for instance oracles would do. Oracles are basically a second layer of nodes that verify information. That's their job. And even if you compromise one oracle, you would have to compromise like 51% of them and whatnot in order to be able to pull off these kind of attacks. And if the surface of attack is pretty large, in the sense that you have to attack, let's say, thousands of computers, then it becomes unfeasible to do that. So kind of similar to the blockchain itself, but I can see oracles being a self-sustaining business on their own. If my oracle all it does is just looks up information on Bloomberg terminal and then gives it to a smart contract, that's basically something that you could earn money on. Because smart contracts would be relying on that information. But anyway, this is like getting too technical. If there's any last words and anything that you would like to basically tell our viewers or listeners, we have people from the finance industry watching and listening to the show, and people from the Cardano community watching and listening to the show. If there's any last words you would like to say, this is the time.
Just the last thing is, if you guys are interested in investing in real estate, then sign up. We've had about a few thousand people sign up, and we're slowly opening up and sending invites. We have a pretty good team and pretty good high quality assets on the platform already that you could take a look at and consider participating in those offerings. You have to be an accredited investor. I have to disclose that. But other than that, the team that comprises, that identifies every investment, every opportunity on RealtyBits is curated. We have a team that looks at the deals, and they have a pretty good pedigree, education, and experience in identifying deals, and before they can post it on the platform in order for you to take a look at and consider investing in. We take a great care in quality of the assets that we bring in, because we want to make sure that by being one of the first ones to do this, we want to make sure that we not only promise and deliver on the promises, but we also promise the efficiencies of the blockchain, deliver on that promise also, because this is not just about us, it's about this new adoption, this new industry that we don't want to fail.
Thank you so much for watching and listening to our podcast today. I'm your host Umed Latifov, and this was Sloth Leader. I'll see you next time.